Welcome back. This is Business Morning Live here on Channels Television and coming to you from the financial capital of West Africa, Lagos. Now let's go to the FMDQ place where we've got Chukuma Egbuche, the fixed income dealer with FSDH Merchant Bank waiting for us. Good morning, Chukuma.
Hi, good morning.
So, the DMO, let's start with bonds. DMO yesterday offered 150 billion naira. Before now, a lot of players had been waiting, on the sideline for this particular offering. And then it came and we saw just about 116 billion naira eventually allotted. What led to that?
So it's a DJ. It was. I would think it's a DMO's choice to end up selling that much or that little. But at the end of the day, what we would see is most of the players who lost out yesterday on the auction would end up moving into the secondary market today.
So what you're saying in essence is that the stop rates were not that attractive for players?
You can't really say that because like you said, from the amount of subscription yesterday, which stood at 197 billion, if I'm not mistaken, you could tell actually that there's the investors' appetite in the federal government bonds. So let's see what happens today when market ends up going into the later part of trading.
Okay, we also understand that some 440 billion naira or thereabouts will be offered in the Q1 first quarter of this year. So that means there's enough room for more players to key into the bonds market, right?
Exactly.
Okay, you want us to talk about the Treasury bills. Let's look at yesterday. There was also an OMO auction. CBN did some, I think, 254 billion naira. Bring us up to speed on how that panned out eventually.
Okay, apparently what was offered ended up being the same amount that was sold. We saw stop rates coming out to the same levels as the previous auction as well. At the end of the day, we also had quite an amount of liquidity in the system because we had FAC came in over 400 billion. And there's expected OMO maturities as well, totaling about 190 billion, if I'm not mistaken, including the refunding from SMIS retail, which is going to happen today. So, if I'm not mistaken, I think from what I heard, it was expected that we're going to have about another 250 or 350 billion auction happening today as well. So I think that's another way for CBN to mop up the excess liquidity in the system.
Okay, it looks like you're really bullish on these offerings. We know that the CBN in recent time has been doing a lot of aggressive mop-up in the system, and it's paying you guys, the operator. Well, thank you for speaking to us. We appreciate your time. Thanks a great deal. So now let's look at what the equities market looks like. It opened about an hour ago. We're joined now by Mr. Andrew TSAKU, who is a trader with Capital Care Trust Securities. Good morning to you, sir. Okay, looks like we're having a challenge with the audio over there. Well, let's look at what the market looked like yesterday. In terms of the equities market, we know that it was a bit bearish yesterday. We saw about 0.11% decline in the index in the last trading session. We got equity capitalization, of course, settling at 11.614 trillion naira. In terms of activity level yesterday, it was 249.53 million units of shares that we saw, valued at 3.12 billion naira. And of course, that also took place in just 4,018 deals. Now, we also know that we're gradually getting back into the earnings season. Yesterday, we saw the earnings of Flour Mill and, of course, the earnings of Guinness, which is a brewer in the market, coming into the market. We understand we now have Mr. Andrew TSAKU back. Mr. TSAKU, thanks for joining us on the show this morning. How is the market currently reacting to the earnings that came in yesterday, Flour Mills and, of course, Guinness PLC?
Yeah, thank you, Temple. The market's behavior, of course, as we all normally will see, is to reward companies that come up with fundamentally sound results. But for some of the names that have turned in their earnings figures, we seem to see some lackluster performance in quite a number of them. Guinness, for example, we discovered it's still under a lot of pressure, being whittled down in terms of its overall performance. We saw a decline in top line, even though in between you can say that the profit level appears, to have risen slightly, but that's not accounted for in terms of the business drive of Guinness, particularly. I think it's still a little under the waters, trying to ramp up the level of attraction in terms of consumer patronage. We've continued to see a decline in turnover, probably because of increasing competition from that scope of business. So Guinness got so much more work to do. It also has to do some better work in terms of its financing cost, which I think to an extent has moderated, but doing a lot more in trying to ramp up attraction in terms of its products, particularly the premium brands relative to its competitors, is one of the areas they will still need to react much more. So in terms of pricing on the floor, we haven't seen any significant attraction to the brand.
So a lot of these two key names, Flour Mills and, of course, Guinness PLC, both under the consumer goods segment of the market, yesterday actually declined in share price. You talked about competition in the sector for the brewers. You've got Guinness in that segment. You've got Nigerian breweries. Now you have the international breweries, also joining. The Champion Breweries is also there, and a host of others, actually. What kind of support level do you see for all of these companies going forward? Because Nigerian breweries, for example, used to trade at about 120 to 130 naira, but for more than a quarter now, we have seen it trending around 80 naira to 90 naira, at some point. So where do you see the support level for Guinness, Nigerian breweries, and a host of others in that sector?
I think the key issue for investors to look at, basically, and of course for all analysts, is the fact that price is a reflection of what value. Quite a number of these companies have truly undergone a lot of stress in the last couple of years, owing to factors that are essentially or largely outside of their domain. So they've had to grapple with infrastructural deficits. They've had to grapple with escalating costs from all kinds of dimensions, which they cannot bring to bear on the pricing of the products that they offer to the market. By and large, we've also seen in terms of consumer purchasing power, except for those kind of products that tend to have what you call inelastic demand, in which case you will expect somebody who is used to drinking a bottle of beer to probably continue doing so, regardless of the situations in the economy. But where consumers have a choice, and there are competing brands, which is a key issue in that segment, they will want to switch camps. And that has continued to reflect in the bottom line of these companies. All of them have not been able to keep a trajectory in terms of the kind of dividend levels they used to pay, the kind of bonuses they used to give. So by and large, as investors continue to receive less than they ordinarily would, it will tell on the price. So in terms of supports or whatever levels, we will continue to see the market adjusting to reward performance. And that's
so a lot of corrections will be seen ahead of the full year earnings that will be released any moment from next week from a lot of these companies. Thank you very much, Mr. TSAKU, trader with Capital Care Securities. on the floor of the Nigerian Stock Exchange there. Well, before we go, we told you that there is an economic outlook by the federal government in collaboration with Deloitte happening today, so watch out for that on Channels Television. With that, it's a wrap on the program. I'm Temple Ashaju. I'll see you next time. Bye.